Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Trading TV. This is your stage to shine.
Hello, good morning. Good morning, everyone, and welcome to a new episode of Chat and Chart. This is the London Session Open, and this is your host, Saif Qaddoura. I hope you had a great weekend, and hopefully we'll get also a better trading week this week. Last week, we witnessed some interesting swings in the market, mainly because of the intervention of the US Treasury. They bought back some of their longer term bonds to control the yields. And we saw that actually reflect to everything else. We saw the dollar drop, which was not expected at all, actually. You can never anticipate or you can never forecast such moves because they don't just announce them. So we saw the dollar drop, we saw euro surge, we saw a huge surge in gold and silver, and of course, not to mention the Bitcoin. All right, so good morning, Arif. Good morning, Moin. Good morning, Yahya. Same to you, Yahya. Thank you. I had a great weekend, and I hope you did too. So yeah, now, I think it's about time. Let's start with the economic calendar, as always, and then we move to the charts and align the technicals with the fundamentals. Today, we have nothing of high impact, so we jump right to Tuesday. So Tuesday, August 25th, we have the German GDP, which is expected to stay unchanged at a 0.2% growth in comparison to the previous quarter of also 0.2. Why am I saying quarter, not month? Because this is the quarterly number. All right. And then we have the CB consumer confidence, which is expected to stay somewhat the same, but slightly less than the previous reading at 90.3 in comparison with 90.8. Now, later on in the day, we have the new home sales for the month of July. They're expected to be slightly lower than the previous at 620,000. Now, let's talk about the impact. Now, if the German GDP comes in anything higher than 0.2%, then that's bullish for the euro and naturally bearish for the dollar, the US dollar. And the consumer confidence comes, and of course, vice versa. We're talking about the German GDP. Now, as for the consumer confidence, if it comes in anything higher than this, then this is positive for the dollar. If not, then it's negative. New home sales, anything above that a forecast of 620,000 is going to be considered as positive for the US economy and consequently positive for the US dollar. All right, so next we have Wednesday. Wednesday we have quite a day. We have the core PCE price index and we have the GDP coming from the US. So those numbers are going to be super important. Why? Because now we know that the jobs market is not doing very well, and the timing of the PCE release is very interesting. Why? Because on Thursday there's going to be the Jackson Hole Symposium, which we expect to see Kevin Warsh speak at. So he's going to be speaking at Jackson Hole on Thursday, and most likely he's going to address the problems and the issues that the US economy is facing in terms of the monetary policy. So we're going to hear him speak about the jobs market. We're going to hear him speak about the inflation and the concerns within the Fed committee. We saw in the Fed meeting minutes, the FOMC meeting minutes last week, that there are some concerns, and there were actually three concerns about inflation, obviously, and there were 3 out of the 12 who voted for an immediate hike to control inflation, and of course, not only hike last meeting on July, but also actually have uh, a planned or a scheduled hikes for the rest of the year. But again, it's a voting game. The FOMC operates a democracy, so to speak. So yeah, nine votes were about holding, and three votes were toward hiking. So they held in the last meeting. But this is, or like this agreement in the FOMC committee is the first since 1980, maybe. So three people out of the 12 is like one quarter of the whole committee, seeing that inflation needs to be moved towards as fast as possible and as soon as possible. So we're going to see Warsh speak at the Jackson Hole and address all those issues, and the markets will be sniffing for any clues from Kevin Warsh, even though he said he's not a forward guidance person. He's not going to give any forward guidance, but at this point, he needs to, because we're seeing a not very stable economy in the US. We're seeing historic debt levels, which we exceeded $40 trillion. The service of debt, or their debt payments every year, exceeded $1 trillion. Inflation is somewhat relatively high, and interest rates are also high, relatively high, and the labor market is suffering. Now, what's the difference between what's happening now and what happened back in 2008? Now, what happened back in 2007, 2008 was that, like, the environment was very similar, but the problem was that, or the difference was, the inflation was high, yes, but interest rates were not high. So that's what's going to actually make it worse this time if we see any kind of recession or crisis. So this time we have one more cherry on the top, in addition to what was happening in 2007, 2008, which is the higher um, uh, interest rates, relatively high interest rates. Okay, so the PCE is expected to stay unchanged. Maybe the monthly number is expected to actually grow by 0.1 percentage point. Why is that? Because the previous reading was about June when we had the ceasefire, and this is going to be about July, and I expect it to be even higher than 0.2%, in my opinion. And then we have the GDP. GDP is expected to be at 1.5%, but the S&P Global Services PMI prices in a different number. It prices in 2.5%. Now, this is 1.5%, so if it comes in actually at 1.5% or lower, this is going to be very, very negative for the US economy in general, because they're not in their best shape. I can safely say that the stock market is in a really good shape, but not everything else. If you look at it as a whole, the economy is not doing very well. Okay, so if it comes in higher, then that's actually positive for the US dollar and the US economy, and it gives room for the Fed to hike without fearing slowing growth. And then we have the durable goods orders for the month of July, and this is the flash estimate. So the previous is 0.5%. The forecast is a no change at 0.5% as well. Anything above that is going to be positive or considered to be positive. Anything lower is going to be considered negative for the US economy and US dollar consequently. And then finally, we have the crude oil inventories, which we had a build of 4.405 million barrels last week. So the reason we're seeing a build, although we're having some supply chain or energy supply chain shocks and disruptions because of the Middle East situation. The reason we're seeing a build is because they're not being able to refine the oil or the crude oil fast enough for it to actually enter the markets. So we have high energy prices, and we don't have the capacity to actually process all of this crude oil that we have because of the disruptions. Hello, TTMCLDS. I remember you told me your name. Was it what, like John? What was it? Remind me. And hello, Soham. So that's it for Wednesday. We go to Thursday. We only have the weekly number of initial jobless claims, still historically low, and the forecast is like a slight disimprovement to 208,000 in comparison to 206,000. So yeah, that's it for Thursday. Friday, we have the Chicago PMI, which is expected to actually show some slight growth to 57.8 in comparison to 57.6, which is actually considered to be positive for the US economy and for the US dollar in general. So yeah, that's it for the economic releases, the news, and the major economic, not like economic events, because here it does not say it on the calendar. But on Thursday, we don't only have the initial jobless claims, we have the Jackson Hole Symposium. So we're going to be waiting for clues from Kevin Walsh. All right. Okay, so I'm going to stop sharing this, and now let's move to the charts. I think about time to move to the charts. We go here. Okay. Go and share. There it is. So as always, we're going to start with the US dollar, the DXY. Okay, let me take a look at the monthly, because a lot of things changed since the US government or the US Treasury actually intervened in the bond market. So yeah, here the monthly is still within the range. So any close below a 98.4 is going to be considered very bearish. So far, we still have a chance, a not very good chance after what happened last week, but we still have a chance of dropping or closing below 98.4, and we have a somewhat good chance of continuing the up move. But for now, it does not look very good. I'm gonna be honest with you guys. So we got rejected from this very important level, which is the close to 102. It's 101.7. And now, even last week, we closed below the 50-day moving average and outside the band. So this is considered to be bearish technically. So it's either we actually retest the 99 level and then continue dropping towards the next level of 97.8, 97.9. So if this trend line gets invalidated, we only have one level to look out for, which is the 97.6. So I'm going to place my alert here, because if it does break, then we might see a lower low than this one here. If this one breaks, then we might be targeting the liquidity over here. But if not, if it manages to actually hold above this level without breaking, then we might see a retest of this major trend line here, this thin black line. And this line would be actually, we don't need it anymore, so let me delete it. And the daily, yeah, so on the daily here, we saw some reaction once, twice, and then it actually broke it, so we don't need it anymore. I think we're going to retest this level now, which is this major trend line, Where does this trend line come from? All the way from 2007. Okay. In case you're wondering, it comes all the way from 2007. So this is very, very important. This level is, or this trend line is very important, and it's been holding up for the past 19 years. So I think, yeah. So on the daily, we saw a bullish rejection to the upside on Friday. But this is what happened. Like if you take a look at this, 1 second, please. So if you take a look at this very big drop, which was not expected, it was the intervention by the U.S. Treasury when they bought back their bonds. So they flooded the market with U.S. dollars. So what happened to the dollar? It dropped this much. But on Thursday, nothing really happened. It was trying to go below. It couldn't, got rejected. On Friday, it tried to go lower. It couldn't. It got rejected. And now we're already above Friday's highs, and very soon, almost above Thursday's highs. So we need to wait and see, because this is not very easy to predict. This is not very easy to understand, simply because there are external factors such as a government intervention. Okay, at which time this whole event, the Jackson Hole, you mean? According to Dubai, I remember it was supposed to happen around 5 p.m. or 6 p.m. Dubai time. Let me actually answer you this. Okay, Jackson Hole 2026 Dubai time. Let me make sure. 1 second. Yeah, so it's going to be on. Okay, the first day is going to be at 7 p.m. Dubai time. Okay. And then there's another session on the same day. It's going to be at 10 p.m. Dubai time. And then there's a third session at 1 a.m. the next day and 3 a.m. the next day. So, okay. So yeah, it's at 7 p.m. Dubai time. In situations like this, is it better to wait for forward guidance or just keep trading what you see on the technicals? Now, I would be trading technicals either way, but in such situations, you will get caught, or you will actually, this kind of event might easily trigger your stop loss. So yeah, you go with the technicals, you lose this one, and you move to the next one. But like, is there a way to actually avoid it completely? Only one way, which is not trade. But other than that, if you want to actively trade, you're going to be, this is one of the risks that the market has, which is actually getting caught while you're on the right side, but still you get caught. So yeah. And by the way, speaking of forward guidance, Kevin Walsh is not going to give any, or at least that's his promise, that he's not going to give any forward guidance. So yeah, we need to wait and see. But on the daily, it looks somewhat stable, but it's stabilizing below this support. Like here, let me show you. We have this support level here, which broke down, and now it became a resistance. So in order for us to actually start seeing some positivity, we wanted to close above 99.2, and then we can continue, or like with the original bias of dollar going up. Okay, so 8 hours. All right, so on the 8 hours from Friday, we had a good engulfing candle. Do we have? No, we don't. We don't have any divergence yet. So we might be headed towards the 97.8, 97.6, as I told you. So yeah, we need to close above 99.2. That's the only way we can actually say that the dollar is gaining back momentum. All right, so now you know where we're going. We're going to the Euro USD. On the Euro USD, now we obviously had a very strong rejection from this level, which I'm going to actually modify. So this is the level now. It's 1.1360. So this is the level. We were not able to break below, unfortunately, although we had a very promising trade, but it's still not invalidated completely. It does not look good. I'm not going to lie to you. The short on Euro USD does not look good anymore, but it's still not completely invalidated. So yeah, on the weekly, if we do this, no, if we do this, sorry. Yeah, so we broke above the daily or the weekly trend line. This is the daily, not the weekly. Okay, so on the weekly, it closed very, very bullish, but on the daily, we are seeing the exact opposite of what we saw on the DXY. The opposite is we got to this level and got rejected once, twice, and now third time we need to see it break below 1.1660 to actually confirm that it's actually at least going to target the 1.1630. So yeah, that could be actually a way to look at it. Then we see the 8 hours. The 8 hours gives a very similar or opposite reading of what we saw on the DXY. So it got rejected from here. Do we have any divergence? Not yet, no. So they pretty match each other in the opposite way, if that makes sense. GUP, forget about it. I'm not going to look at it because we agreed that we don't like it. Let me just take a look at the NASDAQ. Let me see how it closed for the week. It closed pretty bearish for the week here. And now I had this order from one of the live streams. I believe Yahya Arif and Soham were there. It got activated. And this is not a real trade I took, by the way, guys, just so you know. We're just like analyzing the market on Thursday, I think, and we took this trade. But the weekly closed bearish engulfing, but we're still, as long as we're above 28,780, we're still good. We're more likely to continue going upwards from there. So on the daily, it just got activated today, and we would actually need to see a rejection from this area for us to modify our stop loss, because it's not a very accurate stop loss. Okay, so here's the level. We hit that, and now we're expected to go upwards. Why are we expecting that? Simply because we have two levels. That's what I explained to the guys on Thursday. We have two levels. It's either we get a rejection from here or we get a rejection from here. Now, obviously, if we get a rejection from here, it's going to be much, much stronger, and it's going to be much more feasible for us to actually enter here with stops here and target new all-time highs. But since it's going very high, and we have NVIDIA earnings this week, and we have many catalysts that are more inclined towards the Nasdaq being bullish, then I expect this level to hold. But again, nothing is guaranteed, so we'll need to actually wait and see. So on the 4 hours, still nothing, no confirmations of it going up, but I think we have a divergence. We do have a divergence, yes. We have a positive divergence on the RSI. Let me see it on the 1 hour. It's going to be clearer, yeah. Yeah, it's very clear on the 1 hours. So on the 1 hour time frame, we need to see it close in 30 minutes above 29,150 If it does, then that's an engulfing candle at a very important point. We wait for a correction, and then we keep going upwards, and then the stop loss moves to be and becomes here. Okay, but that's still not very sure, but it's most likely going to continue going upwards. Let's take a look at the S&P. Let me go to the weekly. The weekly closed also bearish. We have an engulfing candle, bearish engulfing right at the top, and we have a first divergence, negative divergence. So this could mean bad things, but still, I don't think this is going to be the one. On the daily, yeah. On the daily, we're still very close to all-time highs. So I have no reason to think that it's going to actually reverse downwards from here yet. We only have two signs, which are the engulfing candle, the bearish engulfing candle, and we have the negative divergence on the other side. Two signs are not enough for me to actually switch my bias. For hours, look, before hours we have the most two important moving averages, which are the 126-day moving average and the 200-day moving average, holding below the S&P. So I believe that they're going to be able to reject it to the upside. Let's take a look at the Dow Jones. Dow Jones, yeah, we had this trade, which is in the money right now, more than 1-to-1. We placed the same trade on Thursday. It made some profits on the same day. It got rejected, and then later in the day, it closed bearish, but then got rejected without stopping us out. Let me take a look at the weekly first. Yeah, here it came very close to the stop loss and then got rejected to the upside. The daily, yeah, the daily looks still good, but it does have a negative divergence on the daily. Let me take a look at the 4 hours. The 4 hours, how does it look? Looks not bad, actually not bad. We might see a correction to around this area before continuing the upward movement. So overall, we're still looking good. The stock market is still looking good. Now let's take a look at gold and silver. Let me start with silver first. Silver is almost done going up at 71, so $2 from here. But that doesn't mean anything. It just can like close above and continue going upwards, just like the gold did. But gold is a much more liquid asset, and it is the main safe haven of the world and the most preferable safe haven of the world. Now, if you're getting high yields on bonds, then you'll be trading in bonds, right? But if the dollar went down and if the yields are going down because of the intervention, what do you do as an investor? You move to gold, and that's mainly the reason why it went up so aggressively in the past week. So let me show you the weekly candle on. First of all, let's look at the monthly on gold. The monthly, actually look what it did. Now it broke this high and this high, and now it's on its way to break this high, which is 4,700 or like 4,780. If it does break above this, or if it just closes above 600, it's going to be a very, very bullish close for the month, and we might actually drop the bearish scenario. Now, if we go to the weekly, yeah, on the weekly, we were like betting on this trend line to stop it. It was going to, But then look what happened. The intervention came and we saw this huge jump. So, yeah, I believe we don't need this anymore. Yeah, we don't need this anymore. No reason to keep it on the daily. It broke above and closed above the daily trend line. But what was the previous high? One second. This is the first one, second, third, fourth. Yeah, so the 100% invalidation level would be 4,900. But that's way too high. That's way, way too high. Now, you might ask, Saif, what do we do now? Like, if we're planning to buy gold long term, what do we do? Now we have two options. Either now, like, it confirms that it's going up, and then we see a huge drop without breaking the lows, yeah? So we see a huge correction, which is going to be very, very fast. You buy here with your stops here, or you just wait for the bearish scenario to materialize, which is 3,800, 3,600. But for me, like, buying at such levels above 4,900 is not a very tempting thing for me to do. I wouldn't be interested in actually buying above 4,900. It's just not feasible. I might, if I want to look at percentages, I might just buy silver, because I'm talking about long term, not trading, guys. I'm talking about position trades and investing. I might invest in silver instead, because it might double in value, which would give me 100% return. But if I invest in gold at such high levels, such as the 4,900, I will need it to reach 9,800 to achieve the same ROI that I achieved on the silver. Okay, so for me, actually, I'm going to wait anyway, because I'm not trading this month. So I think a lot could change in the last week of the month, especially that we had the Jackson Hole symposium. So if we see anything different from the PCE, so inflation numbers, if we see any different tone or any hawkish tone from Kevin Walsh, I strongly believe that all of this can change in just one night, as it did last Wednesday. So yeah, I think the wisest thing to do now is just wait. Do we have any divergences here? Not really. No, gold is still super, super bullish right now. Like, we had this. Yeah, if we consider this to be a bullish flag, then this happens exactly at the middle of a trend. So this is the short-term trend. If we project it to the upside, then we might see 4,700 first, and then we do, or like, go for the correction I told you about. But now we have different scenarios. So the error in our expectation was this. It was this much. We caught all of this and all of this. So could it be that we're just like mistaken and it's not going to reach 3,800? Very possible, yes. And could be like, could we just be like correcting upwards before moving all the way to 3,600? Also still possible, because look, we still have this area to fill or to reach. And we did a very good job, guys, when we expected all of this move and then all of this move. Okay, we missed it by this much. Not a big deal, in my opinion. I think now it's time for us to get out of our heads and try to be logical. Like, could it be that this is the very low, or like the lowest low we're going to achieve in the next year or so, or maybe like the near future? Yes, very possible. But am I still 100% sure? Not yet. I want to see it break above this level, which is the previous high, before I actually um, can decide that, yeah, it reversed and now we're looking at an upward movement. If that happens, again, I'm going to wait for a correction. Like, for example, if it does this and then starts dropping rapidly, I'm going to be waiting for it to reach around this area, which is 4100, to buy and continue going upwards. Other than that, I am not interested to be buying around this area, which is 4900. I'll just buy silver. Yeah, so just a quick look at Bitcoin. Let's see what's going on with Bitcoin. So yeah, based on the time cycle of Bitcoin, the super cycle, then we are expected to see the bottom around this date, which is October 5th, 2026. So we're going to be waiting for this date to actually unpack it live and unpack it real time, and see if it's actually going to like have the bottom there around like on the 5th of October. Now, if it doesn't, then this looks very good for a reversal, although it did not actually make any failure swings. But a strong invalidation level to the downward movement would be 83,000. Now, if you break above this, then that's a different story, because high, lower high, lower high, lower high, then yeah, and this is a lower low. If this breaks above this, then it becomes less likely to continue dropping. So yeah, interesting times we're living in, actually. Very interesting times. So yeah, guys, I think this is it for this time. I hope this was helpful. Like, open your eyes and stay alert for the PCE, which is going to be released on Wednesday, and for the Jackson Hole, which is going to be held on Thursday. Our guy, Kevin Walsh, is going to speak on Thursday. So keep an eye for that and stay protected at all times, and avoid trading around those times. Around the PCE time, around the Kevin Walsh speech, try to avoid them. So yeah, this is it for this time, guys. Good luck trading this week. I hope you nothing but the best. Take care of yourselves, and I'll see you in the next one. Bye bye.